Good day, you are welcome to my channel. This is Kevin Davis Accounting. So today I would like us to do a number on the trial balance. Previously I had done something in double entry, but I did not show you how we are supposed to balance off the transactions and also extract a trial balance. So there's my number in double entry, which I did double entry part 2, but now this is going to be like a part 3 of double entry, but also involving the trial balance. So before we start, I would like to encourage you to subscribe to my channel. Subscribe and share to your friends. Let them also have a benefit of what you're benefiting. So together we grow and shall become successful. So today I would like us to do a number when it comes to our entry, and I show you how to balance off and how you're supposed to extract a trial balance. All right, now a trial balance is a list of balances. So I'm going to show you later on how these balances form up and how they come into the trial balance, how these balances will get them from the ledger, and then we take them to the trial balance. All right, now I have a question here with you, and I want us to solve it with you. It says the following transactions took place in the books of labor limited. So they are saying started business with cash at hand 30,000 and cash at bank 20,000. Then bought purchases using cash worth 5,000, and then made sales worth 3,000 and received a check. Bought stock on credit with 8,000. Then they're saying sold goods worth 4,000 on credit. Then sold goods worth 4,000 on credit, Then made purchases worth 3,000 and paid by check. Then they're saying received from the debtors 2,000 cash, sold goods worth 3,000 by cash, purchased from a supplier goods worth 5,000 and deferred payment, then paid the creditor 2,000 by check. Required. Post the above transactions in the relevant ledger and extract the trial balance duly balanced. So that's the question that we are going to take. I remember when I was introducing the double entry, I said that there's what we call the golden rule. And the golden rule says that to every debit entry, there must be a corresponding credit entry. Now, I want to show it to you practically how this is being evolved. So we start. They're telling us that he started business with cash at hand, 30,000, and cash at bank. Remember I told you that the statement or the transaction that they give you determines which account you're supposed to open up. For this instance, you're supposed to open up a bank account, the cash account. And since these are the things that we started with, the corresponding credit account should be the capital account. So let's have a look at it. So we can have here the bank, the cash account, and then you can have here the capital account. Of course, this is our debit, credit, debit, credit. Now, they're telling us that we started business with cash worth 30,000. If you check back in the question here, so they're telling us that we started cash at hand 30,000. Therefore, we come here and say we started with cash, which was in the form of capital, 30,000. And so, since we have entered this on the debit side, then we must go to the capital account and we find that we actually credited cash in form of capital worth 30,000. So we have entered it here and we have entered it on the credit side. Remember, that's what our golden rule was saying. Every debit entry, there must be a corresponding credit entry. Now, the next they are telling us that we also had cash at bank, and that cash at bank also we started business with it. Since we started business with it, then it becomes capital, and it was worth 20,000. Okay, now the same applies here still. So that means we gave out capital to the bank, worth 20,000. And so by doing that, we have entered our transactions using the double entry rule, as we should enter them using the double entry principle. So it looks so easy. It is very, very easy, as you're going to see as we continue down. So the next transaction says, bought purchases using cash worth 5,000. Bought purchases using cash worth 5,000. Now, what you need to know is we were supposed to open up the purchases account and the cash account, but we only have the cash account. So it means all that we have to do now is to open up the purchases account. So we come here and open up what they call the purchases account. Now, from what we have read, you need to identify which account is receiving and which account is losing. So they're saying that he bought purchases worth 5,000 using cash. So that means the purchases is receiving, okay, using cash worth 5,000, and we are losing cash to buy purchases worth 5,000. So that's how our double entry is being done, and I hope it's really understandable and very understandable. So the next transaction says, made sales worth 3,000 and received the check. Made sales worth 3,000 and received the check. Now, sales, that means we are selling goods, okay? So if we are selling goods, then we are receiving cash. So they're saying made sales. So you look through, then you open up the sales account. So you come here and say, so since they're saying made sales, and then we received a check, and this one was worth 3,000. So it means we come here and say to the bank account, we received from the sales worth 3,000. Then we come here and then say we made sales through the bank, received cash through the bank worth 3,000. So that's how easy it is. So it's all about you knowing which transaction goes where and how it is supposed to be treated. So by us doing this, we are done with our transaction also, that transaction. So the next bit is go to the next transaction and see. If you find out that the account is new, you open up that account. If you find out that the account has already existed there, you just continue in that same account. So the next transaction says, bought stock on credit worth 8,000. So they're saying bought stock on credit. Now, one is a stock account. So that means you're supposed to open up a stock account, but two, you're supposed to open up a creditor's account. So here, open up a stock account, and then let me open up here a creditor's account. Of course, we have our debit here, credit. So the transaction says that we bought stock. It says bought stock on credit worth 8,000. So it means you're actually receiving stock from a creditor worth 8,000, and then we are losing. We are being demanded stock by a creditor worth 8,000. So that's how easy it is. Then the next transaction says sold goods worth 4,000 on credit. Sold goods. Now remember, the other time it was us getting goods, getting stock on credit, okay? But now this time it's us selling goods on credit. So it means if you are selling goods on credit, that means we are actually giving these goods to a debtor, okay? Now, because of that, it means you're going to open up two accounts still. We have the sales account and the debtors account. So we come here and say the debtors account. So the question says again, sold goods worth 4,000 on credit. So if you are selling goods worth 4,000 on credit, it means the debtors are receiving worth 4,000, and then we go to the sales account and we say to the debtors worth 4,000. Just like this. It is very, very easy, as you can see. There's nothing complicated here. Then they're saying made purchases worth 3,000 and paid by check. Made purchases. Now we have the purchases account already, and then we have the bank account already. So they're saying we made purchases, and of course we paid by check. So we come and say bank, and the purchases were how much? If you check through again, they're saying the purchases were worth 3,000. So we come here and say 3,000. So since we paid by check, then we shall come and indicate our purchases here of 3,000. Just like that. So that's how it moves. Then the next transaction, they're saying received from the debtors 2,000 cash. So remember, we have our debtors, and our debtors already we are demanding them 4,000. But now if these debtors are paying us, that means one, you're going to receive cash. You come here and say cash from the debtors worth 2,000, and then you come to the debtors and say they paid us cash worth 2,000. So that's it. Very, very easy, like I was telling you. So the next transaction says sold goods worth 3,000 by cash. So sold goods, we have the sales. So that means when you sell goods, so when you go to the cash account and say we received cash from sales, and this cash was worth 3,000. So the transaction determines how you're going to enter in the various accounts. So that's it. Then the next transaction says purchased from a supplier goods worth 5,000 and deferred payment. Purchased from a supplier goods worth 5,000 and deferred payment. Now, one, you have purchases, but now they're telling us something that he deferred payment. Now, what is deferred payment? A deferred payment, this is a payment that will be made at a later date. It means payment was not made on spot. Therefore, you receive purchases from creditor, was worth 5,000, and then you come to the creditor's account, and then you say purchases worth 5,000. Just like that. I hope it's being understandable. So the next transaction, they're saying pay the creditor 2,000 by check. Pay the creditor 2,000 by check. Now remember, we have a creditor, this one here, and this creditor actually is demanding us 13,000. So if we pay him by check, it means you're going to lose cash, sorry, money in the bank to a creditor, okay? And because of that, we are paying him how much? We are paying him, they said pay the creditor 2,000 by check. It is 2,000. So you come here and say 2,000, and then you come here and say bank, and it is 2,000. All right. So ladies and gentlemen, these are the transactions that they told us to enter using the double entry rule. Now, I'm going to show you how to balance off the various accounts or ledgers. Then later on we shall extract a trial balance. I want you to follow me as I balance off. So we're going to start with this. So like I told you, shall take the heavier side. This side is heavier. So the heavier side is what we put on both sides. Then we shall have our balance carried down as 50,000. Then it will become our balance brought down. Still, it happens here. We shall take on both sides the side which is heavier. Now this one is heavier, which is 35. Then our balance carried down will be 35,000 minus 5,000, which will give us 30,000. Then our balance brought down will be 30, and you're done balancing off that. Then this still shall come here. Of course, this is 23,000 on both sides. Then what we are going to do is you are going to take the difference, and therefore our balance carried down will be 18,000, and our balance brought down will be 18,000. So by us doing this, we are done balancing off. Then when you come here, of course now this is 13,000, and here shall have 13. Therefore our balance carried down is 13,000, and our balance brought down is 13,000. The same applies here. Our balance carried down will be 8,000, and our balance brought down is 8,000. Even here still will come. Of course, now when you add this, it will give you 13,000. Then that means you shall have 13,000 here and 13,000 here. Therefore, our balance carried down will be 11,000, and our balance brought down will be 11,000. The same applies here. We shall have our 4,000, 4,000. Our balance carried down will be 2,000, and our balance brought down will be 2,000. So the same applies here as well. This is 10,000. Our balance carried down is 10, and our balance brought down is 10,000. So ladies and gentlemen, this is how we balance off. The what? The ledgers or the accounts. Now, allow me take you to what they call the trial balance. I remember telling you that the trial balance is a list of balances. Okay. Now, there are 3 rules I want to give you to help you when you're doing a trial balance. Don't use them as cramwork, but I want to give them to you to help you. So let me call them the rules. So we have rule number 1. Okay. If the balance brought down is on the debit side, okay, then the amount is taken to the debit column of the trial balance and vice versa. What do I mean by this? If the balance brought down, for example, let's say on the debit side for the debtors, if it's on the debit side, then when you go to the trial balance, remember the trial balance looks like this. We have the debit and the credit. Okay. Now, if the balance brought down, for example, here on the debtors, it is 2,000 on the debit side. Then you're going to come here and say debtors 2,000. Okay. So this is a rule that you should know, that when you balance off and the balance brought down, not carried down, the balance brought down. That's what I'll put here. Balance brought down. Now, for example, the balance carried down on sales is 10,000 on the credit. So you come here and say sales, and then you put 10,000 on the credit. So that's how it's supposed to be done. Now, mark that rule, and that's how you're going to execute it. Then the next rule is all assets, expenses, and losses are always found or put on the debit side of the trial balance. All assets, expenses, and losses are always found or put on the debit side of the trial balance. For example, cash is an asset. Do you see the side where it is? The balance brought down, so we take it on the debit side. Bank is an asset. Do you see where it is? We take it on the debit side. Debtors, they are assets. Okay, so we bring them this side. Purchases, these are expenses, of course. So if that comes up, then you know how you're going to place them in the trial balance. Then 3, all liabilities, equity, incomes, and gains are put on the credit side of the trial balance. So this one's like the vice versa of this. So ideally, when, for example, liabilities, things like creditors are supposed to be on the credit side of the trial balance. For example, look at this. Now, you see what the balance brought down is on the creditors, 11,000. So when you go to the trial balance, you're supposed to put on the credit side. Capital is an element of equity. Capital balance brought down on the credit side. So it means when you go to the trial balance, you're supposed to place it on the credit side as well. Now, sales we all believe it's an income. Remember, you're getting money. So sales being an income, remember I said all incomes and gains should be put on the credit side. You see what the balance brought down of sales is? Credit side. So it means this one too should go on the credit side of the trial balance. So those are the rules that you should be keen about. They should help you, and later on we shall use these very rules, especially when you're doing financial statements, to help us determine which one is an asset, which one is a liability, which one is an equity element. So we shall use them to help us in the financial statements. So you're going to say Labor Limited trial balance, and so you're going to have here our particulars. Shall have here our debit, and then shall have here our credit. So the very first thing that we're going to begin with is bank. Cash at bank is 18,000 here. Okay, now let me tell you something here. Sometimes they will give you a trial balance, especially later on when you start going into financial statements, and then cash at bank will be put on the credit side. Or even calculating cash at bank, when you calculate this, the cash at bank, the balance brought down might be on the credit side. Okay, so when it comes on the credit side, don't just cram that bank is an asset, I have to just take it on the debit side. No, if it's on the credit side, then it becomes a bank overdraft. So that means a bank overdraft is a liability. All right, so our cash at bank is 18,000 on the debit. Then we have our capital. Our capital is 50,000 on the credit. Then we have our cash, and our cash is 30,000. Okay. Then we have our purchases here coming in, and our purchases, the balance brought down was 13,000. Then we have our sales, and our sales, the balance brought down was 10,000 and was on the credit. And then we have stock, and our stock, the balance carried down is 8,000. Okay. Then next we have the debtors, and the debtors, the balance that we have is 2,000. Okay. Then last we have our creditors, and the creditors, the balance that we have is 11,000. So we add up here. Now remember, when I was introducing double entry, so when you add here, this is 60, this is 71,000, and this is also 71,000, and this one becomes our total. So when I was introducing double entry, I remember I said that there was a golden rule, and the golden rule always said that to every debit entry there's a corresponding credit entry. Now if that is true, that means the debit side must be equal to the credit side. If every debit entry has a corresponding credit entry, then these two sides should be equal, and because of that, it means our double entry was made right. So this is how it is supposed to be done. Ladies and gentlemen, this is how we balance off our ledgers and extract a trial balance. I know we shall be doing more numbers together, and in case you have any questions, you can reach out to us. The number is always there, projected on the screen. Reach out to us for any further questions, and then we shall discuss. So thank you so much for watching. This is Kevin Davis Accounting. Until we meet again, it's a bye for now.